Hello and welcome to Business Incorporated live on Channels Television. Well, it's a trading day after the MPC decision yesterday. How's the market performing? We'll find out. Here's what's coming up in the next 55 minutes. We get an outlook for rate hikes in Nigeria as the hawkish stance by the MPC continues. Expatriates in Kenya send out a record 87 billion shillings in 2023. And in West Africa, the Ghana government has revised its growth targets for the rest of the year. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the commodities market now, see what's happening with oil traded at the lowest level in about 6 weeks today as the Northern Hemisphere gets deeper into summer with limited signs of the expected fuel consumption surge the period normally sees. We see Brent though up about 0.5%, $81.41 a barrel. Yeah, we've not seen that level for a while, but we see WTI losing the $80 psychological level, $77.36 a barrel. These are new lows we're seeing right there with oil prices, and definitely at $77, we know the Dangote Refinery likes this grade, so it's getting cheaper for Dangote to actually import this $77.36 a barrel. That's for WTI. Let's get a check on metals now. Gold prices inch higher today with investors awaiting U.S. economic data that could influence the Federal Reserve's rate cut timeline. Investors just want to know when we get the first rate cuts. But we'll see spot gold 0.32% up, still holding that new high, $2,415 per ounce. And we see spot silver not left out. That's up about 0.39%. Palladium, a big 1.31% rise, but still below that $1,000 psychological level that it lost for a while now. To other stories, other commodities, 200,000 tons of cocoa per annum, that's Nigeria's production, making it moving from the second largest producer to the sixth. This unfortunate situation, according to the chairman, Cocoa Processors Association of Nigeria. It says it will get worse with the proposed export regulation by NAFDAC. Mr. Olajoye, who was speaking with journalists in Lagos, believes that proposal is a duplication of efforts and functions already carried out by other government agencies. Take a listen.
NAFDAC proposed export regulation 2024 will kill our businesses and non-oil export because the agency lacks infrastructure and human capabilities to regulate numerous Nigerian sea and airport export transactions. Nigerian foreign exchange inadequacy will suffer more under the new NAFDAC export regulation. We, as a heavy investors in the cocoa manufacturing sector, we have investment of over 500 billion in machinery or whatever, all across various factories in Nigeria. As of today, out of the over 15 factories that were licensed from 1986 to add value to our raw cocoa that have been exported and been subjected to manipulation by international market through various facilities, only 4 are in operation. So what I'm saying is that we have about 250,000 processing capacity in Nigeria, of which only less than 30% are in operation today. So what that translates that, as of today, out of the 200,000 tons of cocoa beans that has been produced in Nigeria, is only less than 20,000 tons that value is being added for export market. And what is the reason? The reason has been inconsistent in government policy, policy some sort, and from successive government, change in government has affected the cocoa industry.
And now to climate change, the Securities and Exchange Commission, in partnership with the African Development Bank, they're urging a stronger adoption of green finance to address climate change and promote sustainability in the country. Speaking at a workshop in Lagos, the SEC Director General, Tomi Agama, represented by Executive Commissioner to the SEC, Mr. Bola Jamale, highlighted the urgency of the global threat of climate change, referencing reports of record high temperatures by the International Monetary Fund. Agama called on businesses to support the shift by abandoning unsustainable practices and embracing green finance principles. He stressed the importance of engaging stakeholders in discussions to align investment strategies with environmental, social, and governance principles. Take a listen.
So there are various aspects to green financing that are not only just data related. First of all, data is important, yes, but in addition to data is also the standardization even of identifying your needs, the standardization of the instruments, the regulation around it, the structures that support, and even the investable targets. Each one of them is important, even in addition to the data. So as far as we're concerned, we also need to build a groundswell of professional capacity that would be able to assess viable projects, that would be able to assess compliance with regulation, that would also be able to attract investments to come into the infrastructures and the green financing projects.
The message today is about change. It's a mindset change. But while we're here, the regulator is here, and the regulator is doing two things. One is trying to ensure investors that the money that they invest in, there's a structure being created or has been created to ensure the safety of the money that is going into this. The governance structure is there, and it's been enhanced every time in line with global standards. But more importantly, this is a market development opportunity to educate the market on the benefits as well as the risks. But more importantly, how do you change the risks into opportunities as market changes and as we develop new opportunities for those coming behind us?
And now let's talk about cost of borrowing. We see the 50 basis points increase in monetary policy rate may be moderate, but the adjustments on the asymmetrical corridor to plus 500, negative 100 is a source of concern. And we see the Chief Executive Officer, Commercial Partners Asset Management, Tosin Shinkoya, believes the regulator should look beyond the numbers to see the impact on Nigerians. Take a listen.
With the increase by 50 basis points, particularly if you look at the asymmetric corridor has increased by almost 500. What that means is the banks, anytime they go to the central bank for some respite in terms of funding, they will be funding at 31.75. That clearly means that for anybody or any manufacturer in the real sector, if you're looking to raise capital through the debt capital market or through the bank, you will probably still be borrowing at mid-30s. So, I mean, I don't know if you know anybody that can run a business sustainably between 30 or 35%. So for me, I think that it's about time we begin to look at the impact of 800 basis points that we've done to date. We also need to look at how we need to begin to look at the forward guidance.
All right, time to talk about it. It's all about the cost of borrowing, and it's getting more expensive at this time with the MPC trying to battle and tame sky-high inflation. Let's talk to Dr. Ladibala Kefi, Acting Director, Monetary Policy Department of the Central Bank of Nigeria. Great to have you on the show. Good afternoon.
Good afternoon.
So, as my last guest said from the morning show, how can a business survive on over 35% interest rate? We've seen about 800 basis points interest rate hikes in the whole of 2024. But I want to take us back to the first half of 2024. How would you gauge the impact of the rate hike so far?
Okay, thank you for having me in your studio, Mr.
Ladi Williams.
Yes. So the impacts in the first half, as we can see going by data, inflation has slowed since February, month on month, as it declined for 3 consecutive months before it inched up slightly in June. In addition, exchange rate volatility has also moderated, as we have seen an accretion to the external reserves from that period to date of almost $9 billion.
All right, Dr. Ladi. So yes, it's actually Ladi Williams speaking with you. Our names are quite similar at this point. Yeah. So,
okay, Ladi Williams.
Yeah,
Sorry about that.
No, it's fine.
Sorry
it's fine.
about that.
So, what other tools would you say the CBN MPC is looking at using to tame this stubbornly high inflation at this time, or is rate hikes all we have at this point?
Okay, yes, we are looking at quantitative tightening, in addition to our liquidity management tools that we use, such as the open market operations, the cash reserve ratio, commonly known as the CRR. Yes, these are the tools that we're using, in addition to fiscal and monetary policy coordination, whereby we have a committee where we meet at the technical level on weekly basis with fiscal authorities and all other agencies that generate revenue to assess the amount of liquidity in the system and the injections. Although we don't get it right always, because sometimes we have surprises from the fiscal authorities, but we have that arrangement, in addition to a stronger collaboration that is ongoing between the fiscal and monetary authorities at the highest level through an agreement, like sort of an MOU, which we have been deliberating on to strengthen that collaboration, so that when there is an injection, we would know, to enable us know when to apply our tools to moderate liquidity in the system to curb inflation. In addition, we also use forward guidance. So these are the tools that we use. Thank you.
All right. So our guest earlier in the morning did say that with the rates really high, at this point, definitely it's getting really expensive, for businesses to actually get money, the loans to actually, help boost their businesses, at this time. Because if they're not getting that cheap credit, definitely that's going to play into the way they actually do business at this time. Is the MPC worried about businesses, at this point?
The members of the MPC are very mindful, and they acknowledge the ongoing stress that not only the business community are undergoing, but also the citizens at large. But at the same time, we must not close our eyes to the sufferings of the households as well. So as much as we want to satisfy the business segment of the population, we also have to look at the households. The households are larger in number, and whatever we do will also have an impact on them. And as you can see, inflation inched upward, and the impact on households is more significant because prices of food have gone up. So our policy is targeted at moderating these very prices so that the prices of food can come down.
All right, I know the first half, I think we started with about 100 to 150 basis points the first half of the first hike in 2024. But we're starting off the second half with a 50 basis points hike. Is this what we can expect, going further into the second half of 2024, lower basis point hikes, or do we expect some kind of hold at some point in this second half?
Actually, what we do before the MPC arrived at these decisions, they have to look at the entire macroeconomic environment. They look at all the sectors of the economy, the 4 sectors, including the financial market, including the developments in the financial markets. So we are going to monitor the economic environment, and it's based on what we find that we will take a decision. However, the bank is committed to its primary mandate of price stability and also low interest rate environment. However, the conditions must be right before the rates can go down. It's only in an environment of stable prices and exchange rate that you can guarantee sustainable low interest rates. So my answer to your question is we will continue monitoring the environment, and we will do all it takes and also deploy the tools that are within our vicinity and our power to ensure that prices go down.
Does the MPC have some kind of time frame where we can actually start seeing rate cuts, in Nigeria, looking into the future?
We don't have a time frame, but as I said earlier, we're going to be reviewing and assessing the macroeconomic environment. And if there's need for us to keep hiking, we probably would, because as I said, our ultimate aim is to ensure price stability in the economy. And once you get that inflation right, prices will go down and there will be equilibrium. So our focus is on assessing the entire economic environment, including what the impact on households and the impact on businesses. And just to let you know that we are aware of the current conditions in the country, and in view of that, what the bank is currently doing is trying to see how we can strengthen institutions that we have shares in, such as the Bank of Industry, the Bank of Agriculture, Nexim, where we have equity shares. We've already gone into discussions with the Bank of Industry to strengthen their capacity and also ensure that our money goes where it is supposed to go, that the targets of building and strengthening access to finance for small and medium-scale enterprises is achieved. So we are going further, aside from using our monetary policy tools, to see how we can engage development finance institutions to strengthen their capacity to undertake their primary objectives, which is to provide access to finance for business activities to move smoothly in the economy.
So I guess the MPC is ready to do whatever it takes to tame inflation, even if it means an MPR of 40%?
Well, as I said earlier, we will continue. Whatever decision we'll take will be based on a thorough assessment of the macroeconomic environment. And if we do that, when we see that there's need for us to hike, we would hike. If there's need for us to lower the MPR rate, we would lower the MPR rate. However, our primary objective is to ensure price stability in the economy.
Right, I can't wait.
And that's whatever we need to do to ensure that, we will do that.
Yeah, I can't wait to start reporting rate cuts in Nigeria at some point. I hope that happens really soon. Thank you so much, Dr. Ladi Bala-Kefi, Acting Director, Monetary Policy Department, Central Bank of Nigeria. Thank you so much.
All right, my pleasure. But let me just have a last word here. You said you can't wait to see a rate cut.
Yes, to start reporting rate cuts at some point.
Be careful what you wish for.
Okay.
Yeah?
Okay.
So let's leave it based on the economic activity, the strength of the economy. That will be the determinant.
All right.
Thank you very much for having me.
Thank you so much for coming on. Thank you. All right, now we'll take a break now. Yeah, I should be careful what I wish for. We'll have more of that after the break. We'll take a look at how the market's actually reacting. That's the local boss right here in Nigeria. That's in a moment. Just stay with us. All right, let's head straight to the markets now. We have Adinte Edet with the details, and we know earnings season is upon us at this time. We're getting earnings from Nigeria, earnings from the U.S., with big tech coming in lower than expected. And we also have Unilever today also. I think revenue actually grew with Unilever about 40% year on year. How's the market looking?
Well, good afternoon, Ladi. The market, if you take a look at the screen there, the market at intraday is 0.04%, which is
same
almost,
margin.
Yeah, almost the same margin. Yesterday was down by 0.08%, and that, in Naira terms, that translates to about 46.7 billion Naira for Tuesday's close.
That little marginal drop.
Exactly. And I wouldn't say that it's attributed to the central bank's hiking of interest rate by that 50 basis points, because on Monday you saw the market making, starting off the week, the final, you had that market report, where the market again made some gains, but then made some reversal, no thanks to losses from sell-offs in the likes of Zenith Bank, UBA, FBN.
The banks again at this point.
And it was actually the losers were much more than the gainers, but it's more of put your money where your mouth is. And so far, month-to data, the market is still positive, as we see there.
Yeah, second half starting quite slow, but we're seeing some little positivity right there.
And you have just about, I think you have, how many trading days left in the month of July? Because this time next week, the month of July is over.
Yeah, next week you just have about 3 or 2.
Exactly, just three trading days for the month of July. But Ladi, let's tell our viewers much details about the market for Nigeria and 3 other African countries that we are tracking currently. So there we have it. We were talking about Nigeria's equities market in the red at intraday, but these numbers, like we always say, it keeps changing before it decides to settle at a final destination by 2:30 local time here. But the South African Stock Exchange was the only gainer at intraday for on the African continent, 0.12% in the green, and still that 80,000 points, still trying to claw its way back up to the 81,000 level, which it had reached sometime a couple of weeks ago. Now let's flip over to the other side of the market. We see 2 other markets on the African continent. The EGX of the Egyptian Stock Exchange, 0.15% down at intraday, 29,150.82, while Kenya Stock Exchange, it was in the red for Tuesday, 0.31%, more than 1/4% in the red. And now, this time, let's move over our markets. We're talking about the fixed income market. Yesterday, yes, many saw that coming. We had our analyst talk on Monday where she was expecting a 50 basis point increase in the MPR rate, that's the monetary policy rate, or you call it the cost of borrowing by the central bank, being increased by a 50 basis points to 26.75%, up from 26.25%. Now, what impact did that have on the fixed income market? We saw bearish sentiment for the treasury bills market, also bearish sentiment for the bond market, as well as the OMO, which we saw lots of activity. As well, the Naira was not spared, because the Naira, both at the official market and the unofficial market, were in the red on the day of the Monetary Policy Committee decision. Now, to give us more details about this, let's bring in our analyst, Akpanwe Oputu, chief dealer with Lotus Bank, for details about that. Thank you for joining us, Akpanwe.
Thank you for having us on the program.
Okay. All right, so now let's talk post-MPC. I just mentioned something about the market, but you'll be telling us more about the intraday market as well as some other sides of the market. Now, what impact did, aside from the Naira and some other trading instrument, how did the stop rates, how are they moving at this time, and other aspects of the market post-MPC?
Okay, so we actually expected an increase in the MPR rate. We've seen it coming since February, when the new CBN governor came and had his first MPC meeting. Bloomberg actually carried it and said that throughout the process, we'll see up to 500 basis points increase. So since February till now, there's been 4 increases. So we've seen up to 800 basis points increase in the MPR. How that has affected the market? We've seen yields trend upwards. We saw the closing rate at the last bond auction in the anticipation of the MPR increase. We saw the 2033 bond close at around 21.98% levels. So investors have actually priced in this increase into their appetite. So we continue to see that also play out in the interbank markets where we play largely. We've seen rates actually move up from now. We're trading interbank around 33% levels on overnight rates. And this is what happens when you keep increasing the MPR rate. It becomes really tough for banks to actually give this lending. And for those who are in the interbank market, you see high cost of funds where you have to cover your position on intraday. And that actually also affects the rates with which banks lend to customer, because if you have the MPR rate now at 26.75, it means you have to go back to reprice those risk assets that you have on your books, because you have to actually earn a spread from your investors where you're actually taking funds from.
Okay. Akwen, so now let's take just in 20 seconds, let's have what there's currently NTB, the Nigeria Treasury Bills auction currently going on right now. So just in 20 seconds, give us what is the outcome of this latest Treasury Bills auction, which is the final one for July?
So we expect to see that the yields will actually reflect on where the MPR has increased. So the last one closed around 21.28% on the 1-year paper. So we expect to see a 50 basis point hike at least in the stop rate. And we don't expect to see so much interest yet, because banks can actually get higher returns from playing in interbank market rather than in most fixed income securities, which are far from where the rates are, the other rates are, the inflation figures are.
Okay, thank you so much, Mark. I think we're very satisfied with that analysis, and then of course we keep our eyes out on how the market turns out at the end of today's trading session.
Thank you.
Okay. That was Akpenwe Oputu, chief dealer with Lotus Bank for the fixed income market. So Ladi, time wouldn't permit me. I would have given you more details about other markets, but it's mostly a negative sentiment across board for the markets.
Yeah, definitely. I will keep tracking to see how most of these markets close today. But thank you so much, Anete, for the details there. All right, now let's take it on to London. We have Juliana joining us from our London studio. Great to have you, Juliana. So we see Heathrow Airport, they see record passenger numbers in the first half of 2024. I'm sure that's good news. Yeah, so looking at the numbers there, not bad, at all for the first half. We know there were projections from 2023 that there might be some kind of slowdown, looking at forward guidance from most of these listed companies right there. But let's get Juliana on this first half performance for Heathrow Airport. You have the floor, Juliana.
Hi, hello. Hi, Laddie.
Hi, Juliana.
Right, yes, it's a critical summer period, and of course we know that Heathrow Airport, as with most global airports, have really suffered the hangover of the COVID pandemic. It's been about 4 years now, but alas, they're back to pre-pandemic numbers. In fact, first 6 months of the year, nearly 40 million passengers passed through its terminals, which is really, really good, considering the fact that we were locked down for so long. And at one point, I believe JFK overtook Heathrow as being much busier. So these are really impressive numbers, particularly for British business, which of course has been beleaguered over the past couple of years. According to the new chief exec of Heathrow, 765 tonnes of cargo also passed through Heathrow. So this is a massive boost, because we know that supply chains have been rattled because of the wars in the Middle East and in Europe. So this is really good. However, revenue did dip slightly during that period, I think by about 2.7%. And Heathrow have cited new rules which were imposed at the beginning of the year by the Civil Aviation Authority, which has reduced the amount of money that Heathrow can charge passengers on their tickets. So typically, if you are buying a ticket, lots of the additional prices are put on by the boss of the airport. So, you know, if you're going to, shall we say, a less fancy airport, those extra charges are going to be minimal. But of course, you go to Heathrow, you've got shopping, restaurants, it costs money. But they've had to reduce that fee, which is why their revenue was down. But I think, you know, considering that they're way above pre-pandemic figures in terms of the amount of people coming through, it's only a good thing.
Yeah, that's not looking bad at all. But still, with these aviation companies, we see forward guidance. EasyJet, they're reassuring investors over summer travel that fares might not be so bad. How are you seeing that?
Yeah, this is, again, we are peak summer season. So obviously anyone who's a parent knows their children are at home. People are trying to, you know, keep them occupied. Lots of people, if you're lucky enough, you'll be doing that by going on a fancy summer holiday. So for airlines, this is the crucial period. And I think there had been some fears that perhaps this summer would not be the shining light to kind of crawl back some of those lost earnings. And that's mainly because Ryanair, which is Europe's biggest budget airline, they issued a profit warning on Monday. But alas, EasyJet, which is another budget airline, they've updated investors this morning, showing that in their first fiscal quarter, capacity is up 5%. I think, in fact, their revenue is up also 7% to over £1.6 billion. No surprises that on the blue chip index, they're one of the biggest risers. Their shares are up 6.7%. And I suppose that's because, you know, people are desperate to get away, but also there is so much options and choice out there at the moment. I think Ryanair, even though they are cheap and cheerful, they've had lots of customers complaining about their services online. Is this a reason why customers are now shifting away from Ryanair and putting their money elsewhere? Perhaps that is the reason. And that's what we can see from the numbers that have been released today by EasyJet.
Yeah, quite interesting. I'd love to, travel for the summer. To maybe Juliana can fund that maybe for me with some pounds there. But how are the markets looking?
Tip-top shape. Well, they were at tip-top shape at early trade. I've just had another look at the numbers that are down at intraday. The all shares down 0.26%. The FTSE 100 down 0.26% too, and the FTSE 250, the domestic market, that's down 0.34%. I was saying to Innie yesterday that the British pound is actually the best performing G10 currency of the year, and those performances are reflected at intraday. In the currencies market, the pound is trading up against the US dollar by 0.01%, up to against the euro by 0.07%, but down against the Japanese yen by 0.67%, Laddie.
Right, I guess that's why we saw the pound actually breaching the 2,000 level at some point right here against the Naira. But thank you so much, Julian. Always great having your update. All right, let's get a check on Europe now. We'll see Hungary and Slovakia have asked the EU to mediate with Ukraine after Kyiv placed Russian energy multinational Lukoil on a sanctions list. Let's hear more now from DW correspondent Chibona Chimbelu. Great to have you, Chip. So can you bring us up to speed with what's going on?
Thanks for having me. Well, Laddie, despite EU sanctions against Russia, there are still exemptions for some exports, including crude oil and gas. And some pipelines actually go through Ukraine, which, of course, Russia is still waging a war against. So perhaps it is not surprising that Kiev adopted sanctions blocking the transit of crude oil sold by the biggest private Russian oil firm, Lukoil, despite having an agreement with the EU. Now, Hungary relies on Russia for 70% of its oil imports, and Lukoil accounts for half of that. So there are concerns about energy security in the country. Now, in Slovakia, the main oil refinery is supplied by Lukoil. So this could also be political. Hungary and Slovakia are considered to be the most pro-Russian EU countries. And whether this is a calculated move by Kiev to put pressure on those countries remains to be seen. The EU has said it is ready to mediate between the affected countries and Kiev.
Are EU sanctions against Russia working?
Despite sanctions, Russian energy products are still making it to EU countries, both legally and illegally. Russia has been able to export crude oil to countries like India, China, and Turkey, and these countries have then been able to refine the oil and export it to European countries as jet oil, for instance. The Kremlin has also been using Western vessels to circumvent the $60 oil price cap. That allows it to sell crude at a higher price than the limit set by G7 countries. So Russia has still been able to raise funds for its war chest. And one study, in fact, shows that the Kremlin has earned 700 billion euros from the export of fossil fuels since the start of the full-scale invasion of Ukraine in early 2022. But the sanctions have still been able to have an effect. They may have cut Russian fossil fuel exports by 12%, according to one estimate. So the answer is the sanctions are working, but not as much as they could. And experts say if some of the loopholes were closed and the West made it even harder for Russia to evade sanctions on energy exports, the effect would be more than double what it currently is.
All right, turning to the markets now. Deutsche Bank has announced its first quarterly loss in 4 years. How's that looking?
Well, Deutsche Bank said it suffered a loss of 143 million euros in the second quarter. It took a 1.3 billion euro charge related to the takeover of Postbank. That is, of course, what dragged down its bottom line. Deutsche Bank has gone a major restructuring in recent years, and it is now relying more on retail and corporate banking. And its restructuring appears to be working. The bank has been performing better, but of course, investors can still be jittery about its shares. And of course, speaking of the market, European shares are actually expected to trade lower today after big tech earnings failed to impress investors. And economic data today will include German consumer confidence and Spain's producer price index.
All right, thank you so much. It was great having your perspective there. Chipona Jimbelu, DW correspondent, giving us the information right there in Europe. Let's go to other stories now. Experts in Kenya have won about 87 billion shillings, and that's a testament to the growing economic impact. You say expatriates residing within Kenya, they remitted a new milestone there, unprecedented 86.99 billion shillings to their home nations by the close of December 2023. This figure from the comprehensive analysis not only signifies a substantial financial outflow, but also serves as a barometer of the improving fortunes and significant contributions of foreign residents in Kenya. And now let's take a look at what's happening with refining right here in Nigeria. So we see billionaire responding there to reacting to the challenges we're seeing with the Dangote Refinery at this time. And this one is from, they refer to him as a strong man of the financial and capital market right here in Nigeria. That's Mr. Femi Otedola. He went to his ex and he's actually penned a message there. He says, my brother, the visionaries, built the largest single train refinery in the world. Not in Kano, but in Lagos State. He's the owner of the second largest sugar refinery in the world, and also in Lagos State. And additionally, has established one of the second largest fertilizer plants in the world, soon to surpass the biggest one in Qatar and also in Lagos State. Furthermore, he's built a fertilizer plant in Lagos that already exports globally. He's called Aliko Dangote a titan that God created specially for mankind, you know, at this point. So it's a long tweet, or X. It's not, I still call it Twitter as well. There's actually X. So right there, we have the comments right there from Mr. Femi Otedola. Then we also see the president of Gabon, that's Brice Oligui Nguema, asking the president and chief executive of Dangote Industries, Mr. Aliko Dangote, to explore investment opportunities in Gabon. During a meeting between Mr. Dangote and the Gabonese president in Libreville, President Nguema emphasized potential investments in cement and fertilizer production. So we're seeing everyone here trying to let us understand the importance of Mr. Dangote, at this point, and this refinery. Definitely, everyone wants what's best, for the country at this time. But let's drill down more now on most of these comments. We have Chinan Dikwa, Vice Chair, African Energy Council, joining me via Zoom. Chinan, great to have you.
Pleasure to be here, Ladi.
So talk to me. I'm sure you've heard all the issues right here we have with the Dangote Refinery in Nigeria. What do you make of this, saga at this point?
Well, Ladi, I think this has been a very robust discussion. Lots of people have commented on it, and I think it's great. But if I just start from, your introduction there, talking about Femi Odetola, the first thing I think, what's very poignant about that is this is the philosophy of an investor, okay? So he's coming at it from an investment standpoint, and we haven't quite heard that dimension of yet. Heard lots of analysts who have talked for and against and all of that. But if I just stay with Femi Odetola for a flip second, he looks at Dangote principally for the investment that this man has made. And quite frankly, even from my standpoint, I think he is probably the most important Nigerian that we have right now. And I don't say that very lightly. It is true. He has invested probably the most of anyone that we have seen in the last 20, 30 years. He put down $19.5 billion, for this refinery. If I put that in context, if you think about the total amount of foreign direct investment that comes into Nigeria year on year, the last few years, let's take upstream, was 50 billion. 50 billion in the whole of Africa would come into all of Africa. Nigeria would probably get at the time maybe 6 or 7 billion year on year. Dangote has put down 19.7 billion of his money, not even borrowed money from his balance sheet. A lot of the plant was financed from his balance sheet. So he's put his money where his mouth, is. And that sort of investment, it should really be humbling to anyone. And I think you hear that from Odetola. This man is single-handedly the most important Nigerian. And I think he requires a lot of protection from everyone else and not terrorism, without a doubt. And he's not the only one who's saying. So if you listen to your second statement there, Gabon, and I'm calling him in. Because if your country do not treasure that amount of investment and the intellectual capital, the innovation capital, the risk-taking, then other countries would need that. So he's there in Libreville, like you mentioned there, talking to the president, looking at investment in cement and fertilizer and all of that. And if he moves his capital out from Nigeria, that's again capital flight that we do not want. Already we're having lots of pressure on our foreign currency and investment coming in. If we start to treat our investors, this way, there's a huge chance that there will be capital flight and they will leave. And this problem is not just in Nigeria, it's all around the world. Everyone's trying as much as possible to keep investors in and attract investment. And so far, unfortunately, the Nigerian climate is one that, sort of puts pressure on these important people and they're starting to look outside.
Right, and definitely we've heard from the billionaires, we've heard from the government, we've heard from Dangote, and I'm still wondering who's thinking about the average guy on the street, at this point, having to pay over 700 naira per litre, for fuel at this time, and we've seen how that's played into Nigeria's inflation rate, at this point.
Nadia, that's a really important question. In all of this, what's missing is the average man on the street, the man who has to go to the pump and buy diesel, petrol, 700 naira per litre. That's the question. That's the part of a discussion that we're not having. But I would say this very quickly. We had statements from the CEO of the NMDPRA this week talking about the fact that Dangote's quality, the quality of his product, is inferior compared to that of the ones that are being imported in. So the focus there is on the quality. Okay, so think about this for a split second. Here we have people, like you mentioned there, people at the pump who are struggling to get 1 litre, extremely expensive. You're telling us about the quality. Here we have people out there who are looking for this petrol, and diesel, and they can't find it. And you think the important thing to Nigerians is the quality of the diesel? Of course it's not. The reality of it here is there is a situation where, and I'll be very transparent about this, we have an investor who's coming to disrupt an incumbent sector. This incumbent sector, is driven by lots of importers, people who bring, petroleum products into Nigeria. He's coming in his set a refinery to disrupt that. And what we're seeing, quite frankly, is fighting from these importers to try to lock him out. Because the reality of it is, once this 650,000 barrel capacity plant is up and running, and we're getting PMS from there and diesel and all of that stuff. One, the price will crash. That's a fact. Secondly, foreign exchange becomes very measured for Nigeria because our dollars will not be flying out. Pressure on foreign exchange will decrease. Ultimately, the exchange rate potentially, could see a move on that stuff. I think the reality of it is we're just finding a huge cabal, if you like, who are trying to lock it in to make sure that importing of fuel, remains the standard, and that's really unfortunate.
Yeah, definitely. I really wish that we could actually make it less profitable, for those actually profiting from importation of PMS and all of those petroleum products. But Chinan, definitely wish me luck here. I'm hoping at some point I can pay maybe 300 naira per liter, but we'll see how that goes. Thank you so much. Chinan Deko, Vice Chair, African Energy Council.
Pleasure. Thanks for having me.
Thank you. All right, now let's get a check on other markets at this time. But first of all, we see the government of Ghana. They've revised some of their forward guidance for the economy at this time. They're saying non-oil real GDP growth rates, they revised that upward from 2.1% to about 2.8%. Growth in GDP deflator, that was scaled down from 20.2% to 17.5%. The same for nominal overall GDP. They revised that to about 1 trillion Ghana cedis to 1 trillion Ghana cedis at this time. Then they're projecting inflation about 15%. And that's for the end of 2024, and that's in Ghana. All right, talking about the markets, we see red on the screen at this point. That's Bitcoin leading the pack down. Red, just a few pockets of green right there. TRX, Tron managed to stay in the green, but we see the big boys, Bitcoin, Ethereum. But BNB also staying up there. Let's look at the top cryptocurrencies we track. At this time, definitely we know that once Bitcoin sneezes, the whole market catches the cold at this time. Let's look at top headlines. Toyota there, they're exploring the Ethereum blockchain. They're eyeing incorporating Ethereum blockchain into the vehicles. And the giant is also leveraging Ethereum blockchain and designing vehicle mobility oriented accounts. So we're seeing some use case right there, and Toyota trying to explore that at this time. We also see other news there. Pepe, price up about 15% in a month at this time. We know how most of these investors like their meme coins at this time. So we're seeing Pepe actually playing that role there. Let's bring in Rume Dominic now. He's the Deputy Managing Director, Aviat Industries, joining me via Zoom. Great to have you on the show.
Thank you very much, Ladi, for having me.
Yeah, so it's all about earnings season at this point, and looking at Tesla's results there, we know Elon Musk definitely acquired a lot of Bitcoin, at some point in this market. But looking at the data, we see Tesla's Bitcoin holding that remained unchanged in the second quarter earning report. So he's not adding any more Bitcoin at this point. Are investors worried?
Well, interestingly, 2-3 years ago, we were also speaking very, very loudly about how Elon Musk was actually playing in the cryptocurrency space, seeing that he's able to cause 1 or 2 market fluctuations from either his reactions or his comments. And we all really want a future where we understand that one of the most powerful men in the world, as a rich man, also has Bitcoin in his portfolio and is doing well. You see, USA has about 206,000 Bitcoins. China has about 196,000 Bitcoins. MicroStrategy has about 160,000 Bitcoins. Although the German government sold off a few number of thousands of Bitcoin 2 or 3 weeks ago, Elon Musk, being the richest man in the world, it is actually a wise thing for the richest man in the world to start applying caution to his investment. The future is digital, as we know, and digital currencies is what our children will save in, invest with, and spend. So there is a need for him to have some reserve of it. I'm sure that's one of the major reasons why he's not selling off this quarter.
Right. I remember definitely there was a time anything Elon Musk said about crypto, it definitely impacted the market. But are you still seeing that strength, from Elon Musk? Remember, we've seen notable characters in this market, notable billionaires actually say stuff about crypto, Bitcoin, and we see the markets actually react. Do you see any other voice or billionaire voice, coming into this market aside Elon Musk at this time that's going to be moving things around?
Right now, that question makes me smile the way I'm smiling, because I was expecting 2 days ago when Joe Biden announced that he was going to be dropping down from the presidency. In fact, in our signal room, we had already even started closing off our long positions to be able to start preparing for the cushion that particular news would have on the market, or the effect of that news on the market. That means we're expecting that the market should quickly and truly have a downtrend. Do you know what happened next? The market went up. It went up to over $68,000, right? And so that's to let you know that even in the last 5-6 months, Elon Musk has not been able to move the market the way he used to move it. So the president of the United States could not really move the market in the direction that we're expecting based on the fundamental news that came out. Elon Musk has not also been able to do that in the last few months successfully. Right now, I'm seeing that Mark Cuban, which is one billionaire as well, which is attaching himself to the Hillary one of the campaigns that's happened in the US. Right now, that guy cannot also move the price of Bitcoin. So there's no voice. Bitcoin has grown over the last 1 decade to be able to see that it is strong, it is resilient, and it is sound money that is the future of the world.
Sound money. Thank you so much, Rumi Dominic, Deputy Manager, Managing Director, Aviot Industries. Always great having your perspective.
Thank you very much. I'm grateful.
And who knows, maybe former President Donald Trump might be the next voice to actually move this market. We'll definitely keep watching out for that. But that's the show today. Thank you so much for watching. Visit channelstv.com for more updates. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.